Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, June 14th through Friday, June 18th, 2010. Well folks, let's get right into the charts here. Again, last week was another wild week for the markets. Early in the week we sold off sharply, retesting these double bottoms. This is the daily SPY chart that you are looking at. It again mirrors the S&P 500. So here you can see again on Monday, Tuesday, right here, massive selling again, yielding a move down to that double bottom right around the 104.50 level on the SPY. And again, here's the pivot low in May. Here's the pivot low that we hit this week or this past week in June. And ultimately, by the end of the week, the markets rallied off and headed towards the 20 moving average. You ended right above the 20. Ultimately, there is some possibilities that you will see early next week a move up to this pivot blue trend line and the 200 moving average at around 110.75 to 111. That again would be a general area that you can look for as a good possibility, about $1.25 higher on the SPY. Now, overall, we have to look at what's going on in this market. Last weekend, a lot of negativity, a few positives, but ultimately the market was so negative early in the week that the spiders enabled themselves, or again, the markets enabled themselves to reverse off that negativity. And that's something that psychologically will happen. When everyone is negative, look for the markets to reverse. And early in the week with a move down here, everyone was talking about a possibility that we would break lower, and that's exactly why we did not, or a good portion of it. Now, part of the big reason here, you have to look at the currency markets. The currency markets are huge. The FXE is the Euro ETF. Again, a beautiful move through this little double bottom. See this little double bottom right here? We broke down. Right here is where, again, I sent out the long issue for a play here on the Euro to go long. And then again, that was on that Tuesday afternoon, again, in the markets when we were down here at 118.98. That's, again, where the signal went out. We sold at 121.03 for, again, $2 plus gain on the FXE. And again, nailed that long euro, but you can see how the move took us down here. Everyone starts panicking right down in this area, and then again, the market reverses, or the euro in this case reverses. The dollar ran up into a massive resistance, my key level that I isolated in the Research Center nightly videos at $25.80 to 85 cents right here. At that level, again, you can see the beautiful pullback. Where did we pull back? Right to the 20 moving average, right to a key level here at around 25.40 to 45. So again, notice the pullback here, beautiful pullback right into the 20, and then Friday, the dollar inched up just a little bit off that 20 moving average, which again should be expected. Now, the beautiful thing about Friday's market action, which again speaks volumes for this market, if we go to the intraday chart, you can see beautiful choppy consolidation after Thursday's big update. Thursday, we had the gap up. Here's where we closed on Wednesday, again down near 105.50 to 106 on the SPY. Then again, Thursday, you saw the gap up to 108. Beautiful level. You can see here, you gapped up. You rallied up to the next key pivot level, and again, these levels are on my charts every day, and again, we call these levels out so beautifully and so well that people can trade and make millions off of them. But either way, you can see the move up right here to the 108.50, 108.65 level, pullback, retest, double top. Then look at the pullback to gap window. Gap window, again, signals good support. The markets never get through that level, and by the close, they're rallying all the way up to new highs of the day. That was a good precedence. The idea that you could end at the highs of the day on a Thursday here, again, when the market so earlier in the week was so negative. Then Friday, the beautiful thing about Friday, the massive choppy consolidation here. Look at this. You gap down on Friday, but quickly the markets reverse, go flat, and then just chop up and down. This is bullish sideways consolidation until right around 3 o'clock, 3:20, and then all of a sudden buy program hits, market squeezes up into the close. That's 2 consecutive up days. That is a big deal for this market right now. And again, in tune with that, you're not going to have all up days going forward, but again, you should have a little more upside in this market over the next 2 to 3 days early in the week next week. And I do anticipate a move to the 110.75, 111 level at least, possibly upwards a little higher. But again, the majority of the easy gains are out of this market. And we went long early last week, and again, Tuesday, picking up some ATPG, some FXE, some other plays as well. We have some AK Steel and so forth. Ultimately, on Friday and Thursday, unloading a lot of those. I still hold a couple small positions with break-even stops at this point, as again, we made massive amounts of money again last week in the Research Center as the swing trade calls continue to be basically batting 100%. And we're going to talk a little bit more about that towards the end of the video. But nonetheless, I want to show you how key these levels are on the charts. Now, again, as I mentioned, you have gap window right here, but the key is to recognize why on Thursday did we go up to this blue line, why on Friday do we hit it, then again, until later in the day did we break out through that blue line going to the yellow line. What's so significant about this line? and this line, and why can you utilize this to day trade or utilize it on larger time frames like the weekly or the daily time frame to maximize your profits. And what I'm going to do is I'm going to shrink the chart down here and show you something. All right, take a look at this, folks. This is what's so amazing about this. All right, so take a look at the blue line. This blue line, if you had known that level, you could have shorted on Friday or on Thursday. Either way, Thursday into the close, you could have shorted right there for the gap down. Or Friday, again, you could have played that once you bought it down here and rode it up, or shorted right here against that blue line for the pullback. But notice what it's coinciding with. If you go back to the 4th of June, that pivot double top right there, that's called gap window as well. So gap window turns out to be a beautiful shorting opportunity every time you hit it, for the first time on Thursday, first time on second time on Friday. And then ultimately, by the end of the day, when you squeeze up, you go to this yellow line. What's so significant about this yellow line? Scan back even more, take a look at that pivot low. So you guys see how each level works, and if you utilize this correctly, you can literally pinpoint major levels on all time frames. And remember, this happens to be an intraday chart, 10-minute chart of the SPY, but it doesn't matter. This will play out perfectly on a daily chart. You can find these same patterns, these same levels on the daily, weekly, monthly, depending on what kind of investor you are. Are you a day trader, swing trader, or long-term investor? It will work on all time frames. That's the beauty of what we do here, folks, is that it's universal. There's no catch, there's no nothing. It's just plain and simple. Charts will speak to you. They're going to tell you exactly where they're going to pull back and when they're going to break out by utilizing the in-the-money stocks methodology that we teach in the research center. All right, so again, you can see the blue line, how significant it is, then the yellow line, and ultimately my point is, if you get through this yellow line on Monday or Tuesday, and again, the markets are short-term extended, but if you get through this Monday or Tuesday, which eventually I do think you do, you're going to go right up here to the red line and this white line. Why is this significant? Because it's gap fill. Gap fill, really 110.50 to the 111 level, ultimately all the way to 111.10 or so, which would be a pivot top, 110 and 111.15. See this pivot top on the third right up here. That'll be where you're going to hit a majority of your resistance, anywhere between gap fill right in this area, and that's ultimately the general target. And that's once that's done, again, the market may go a little higher, but the easy money is definitely made. Even now, the easy money has been a majority made, and that's why I sold a lot of my positions on Friday, as the Research Center subscribers were notified of that as well, and to take some profits just in case, because you never know. When you go literally from this point down here, which is where we were buying and going long right in this area here, and then some more here, once we saw this type of pattern, and again, developing, telling us the market was going to go up, that loading the boat on the long side, again, we moved all the way up from really 105 back to 110. That's basically a 4 to 5% move in the markets. You have to take some profits off the table in such a short amount of time. You're talking about 3 days going up almost 5% in the markets. You got to take some off the table, and that's what we did, folks. And again, the profits continue to flow like water in the Research Center, even in the chat room. It's an amazing thing, and I encourage you all to join. I think last week, just buying $5,000 worth of each position that we called out in the Research Center between the Pro Trader watch list and the hot charts and alerts would have netted you something like $10,000 or something like that on a $49.99 a month subscription. That's in 1 week, $10,000. I'm spending $49.99. I mean, it's ridiculous, and that's just a $5,000 plus investment. I mean, in each play we talked about, it's really quite something. But in any case, it is what it is, and people can make their own choices and come to their own conclusions. But the point is, just we're here to make money. Bottom line, here to make money. Enjoy it, enjoy it, enjoy it. All right, now going back to the daily chart. That's your daily chart. You want to watch out for this. A couple different things that I want you guys to be looking at on your daily points of interest for next week, and I'm going to do that by going to the economic news. Now, next week, this is what I'm talking about. You guys know upper levels where you're going to go most likely, and we can see right here that this will be your general area of major resistance. Now, if you gap down, I think any pullbacks in this range, as long as you stay above 104.50, are going to be buying opportunities. If you get down to 105, 105.50, 106, buying opportunities as long as you do not get below 104.50. You get below 104.50, run like the wind, because this market would break down in a major way and go underneath 100 on the SPY. Now, next week, all we're looking for is how does the euro react? How does the dollar react? Do we see a further pullback in the dollar and a further rally in the euro? If that is not a big deal and that stays stationary, then you turn your attention to the Gulf oil spill. That does affect the markets, believe it or not. Psychologically, it is a big thing. And also watch BP. Last week, we saw BP roll over late in the day one day. I think that was on Wednesday, and it actually brought the markets down a little bit. And that's why we saw this massive reversal, or a big reason of that massive reversal right here on Wednesday before the gap up Thursday when BP recovered. So it actually does have a play here in the markets. So again, global concerns are number one. After you get through global concerns, then you're going to start looking for inflation data next week. Housing permits and housing starts early in the week on Tuesday, I believe. Actually, that's Wednesday. and you have to just continue to watch and keep an eye on this stuff. Later in the week, you have PPI, CPI, that's inflation data. We're going to kind of watch and see exactly if we're seeing any bit of inflation. I don't think we will see much, to be honest, but you want to keep an eye on it because it could affect the dollar. Those are key reports that will affect the dollar, because if there's inflation, the Fed may have to raise rates. If they're going to raise rates, then they're going to obviously it's going to hit the dollar, essentially. Dollar would end up dropping, which would actually be a good thing for the markets in this situation. Watch jobless claims next week. We still seem to be stuck right around that 450,000 level on jobless claims. But remember, the majority of this market is going to be driven by the euro and global issues. Global issues in Europe, global issues in Asia, in China. Continue to watch that. That will be a majority of it. Take care, folks. Be ready. Join the research center. Join the chat room. I will be in those two events, giving you everything you need to know. Talk to you soon.